Imagine waking up one morning to shocking headlines. A sudden political upheaval, a new law shaking up industries, or sanctions that freeze entire markets. For many, this is chaos. But for the informed investor, it's opportunity. Today, we're going to dive deep into how to turn political risk into your advantage and why most investors completely ignore this hidden layer of profit. Political events are often unpredictable, yet their impact on markets is enormous. A seemingly small policy change can send stocks plummeting or push currencies soaring overnight. The secret is learning to see patterns where others see panic. Countries, governments, and leaders leave clues. Understanding their agendas, historical tendencies, and economic policies is like having a roadmap to navigate the storm. Think about past global events. How did investors respond to Brexit or to the US-China trade tensions? Those who studied the political landscape didn't just survive, they thrived. They knew which sectors would face headwinds, which companies would benefit, and when to pivot their portfolios. The lesson is simple. Risk is only danger if you're blind to it. The first step is identifying politically sensitive sectors. Energy, defense, finance, technology, and healthcare often react sharply to legislation, elections, or international disputes. Observing government signals is crucial. Speeches, policy drafts, or subtle hints in the press can forecast market movements. Diversifying intelligently is the next step. Spreading investments across regions, sectors, and instruments protects against sudden shocks, while maintaining exposure to potential gains. Now, change your mindset. Instead of fearing political instability, treat it as data. Each development carries insight. For example, a country pushing strict environmental regulations might harm traditional energy stocks, but simultaneously create explosive opportunities in renewable energy. The same political event can be both a risk and a reward. Your perspective determines which side you see first. Stories make this clear. A small hedge fund noticed early signs of regulatory tightening in a major tech hub. While most investors panicked, the fund strategically adjusted its portfolio to favor companies likely to benefit from the shift. Within months, they turned a high-risk scenario into extraordinary returns. That's the power of political risk intelligence. The biggest mistake investors make is reacting emotionally. Fear drives selling, speculation drives panic, and opportunities vanish. But when you combine research, historical context, and a structured approach, political events transform from threats into predictable advantages. If you want to stay ahead of the curve and uncover the hidden patterns that drive markets, make sure to subscribe now. I post insights like these every week, showing you how to see what most investors don't even notice. Hit that bell, because missing this could mean missing your next big opportunity. Back to our strategy. Timing is everything. Political shifts don't always happen suddenly, they unfold. Learning to read the signs, anticipate votes, regulatory changes, and international negotiations allows you to position yourself before the crowd reacts. Pair this with technical analysis and risk management, and you're no longer guessing, you're navigating. Let's break down advanced signals. Elections and leadership changes. Study the candidate's history and predict which sectors will benefit or face restrictions. Political speeches and media coverage. Recurring themes hint at future policies. International agreements and sanctions. Monitor global trade trends, tariffs, and alliances. They can transform industries overnight. Sector-specific legislation. Companies reliant on certain regulations are sensitive to governmental changes. Another example. During a fiscal crisis in an emerging country, common investors fled, selling local assets. A small group of analysts noticed the government's plan to stabilize key sectors with tax incentives. They bought strategic stocks before the recovery, turning fear into profit. The difference between loss and gain lay in having the right information and interpreting the signals correctly. Political risk isn't just local. Global companies can benefit from changes abroad, and currencies can react violently to foreign political decisions. Understanding international connections is essential. A regulatory shift in Europe, for instance, might benefit American multinationals while causing emerging market currencies to drop. Always ask yourself, how would a political change affect my assets? Which sectors and companies might benefit unexpectedly? What opportunities are hidden by collective fear? The answers give you a competitive edge most investors never develop. Don't underestimate the role of political psychology. Leaders make decisions based on public opinion, international pressure, and internal interests. Understanding these human motivations allows you to anticipate market moves before numbers reflect the change. The true difference for a strategic investor is reading beyond the raw data and seeing the narrative behind it. Events don't have to be threats, they can be guiding lights. Study governments, track trends, control emotions, and find opportunities others miss. You're not just investing, reinterpreting the pulse of nations and leveraging it for strategic growth. Next time the news shakes your confidence, remember, where others see risk, the informed investor sees opportunity. That mindset alone can transform your investing journey.